One interesting thing about Bitcoin is that it doesn't add to its supply as much as gold does over time. This means that it's even more scarce than gold, and it can move around just as fast as fiat currencies. In the long run, that's a really interesting story that will draw people in and change some of the structure. But, I think that's a story that spans many years. That's not like a story that takes place over 1 or 2 decades. It takes a long time to make changes to these huge buildings. One interesting thing about the time of Bretton Woods is that the decision to leave in 1971 gets a lot of attention. But the Bretton Woods system, which was set up in 1944, was actually breaking down all through the 1960s, as shown by the evidence. It began to be used in 1946, but it wasn't really fully put into place until the late 1950s. That's when they took away some of the controls that had been in place since the end of World War II, and that's when they began the whole process. After that, the amount of gold on hand went down all the way. Part of the reason for that was that we were running big deficits. It's also partly because banks were lending more dollars and weren't limited by the amount of gold in the system. In this case, from 1950 to 1970, the total amount of money in circulation tripled while gold reserves shrank. I think there will either be no recession or a soft recession. When I talk about a soft recession, I mean a recession that is specific to a sector, or the kind of recession that you usually see in emerging markets, which is very different from a recession in a developed market. People usually think of either COVID or the financial crisis of 2008 when they hear the word recession. Compare this to the last recession, which happened in 2001 and was obviously very bad for stocks because they were way too expensive. Yet the recession was not very bad, as shown by the low unemployment rate, small drop in GDP, and little damage to other industries. By most measures, it wasn't a very bad recession. And I think that if we do have a recession, and I know that in 12 months a lot can happen, that was my point. I think that if we do have a recession, it will be more like the one that happened in 2001, where some unemployment numbers and GDP drops were not as bad as people thought they would be. However, that can still mean very important things. One of the things that worries me the most about the markets is that there are a lot of bond-like stocks. Since these are defensive, high-quality stocks, many of them have been bid up to very high prices. Consider Costco as an example. It's a great business, but the stock price makes it look like they're into AI or something. That's why you have that problem. Yes, you do have that issue. Or even if the economy is only average, let alone slightly in recession, those prices are hard to defend at these very high levels. In that case, I think it's very sector specific. There are many things you can do with Bitcoin that you can't do with an ETF. For example, you can keep it for yourself, take it with you around the world, or use it to make money. But not everyone wants or needs that use case right now. However, ETFs can make sense for people who don't think they'll ever need that use case. Some of the things they offer are retirement plans, asset management, and regular brokerages. For this reason, I think ETFs are better than GBTC as long as they are an option. GBTC is now also an ETF. Its fees are higher than some of these newer ones, which is a bad thing. So if I had Bitcoin price exposure in a retirement account, for example, I would probably switch to these cheaper options like Fidelity, BlackRock, or other low-cost ETFs. If I had GBTC in my retirement account, I would talk to my tax advisor because, going after low fees isn't always the best idea because you might get hit with a capital gain tax you didn't expect. You don't want to do that because you want to get the most out of all that compounding. It's hard to talk about cash savings. As a way to save money, a doctor friend of mine in Egypt literally stacks dollars under his mattress. This is because his country doesn't have an equity market that's really good for long-term investments. He doesn't want to keep his own money. It all comes down to the fact that he has some real estate, but that's not easy to sell. So it comes down to money, dollars, gold, and assets like Bitcoin and other similar things. What makes things even more complicated is the fact that if I send money to a graphic designer in country size, it might be Egypt, Nigeria, or Argentina, often they'll get it in their own currency at a fake exchange rate. Then there's the question of where to keep your savings or how to make sure that your prices go up every year to keep up with the falling value of the dollar. One cool thing about Bitcoin and stablecoins in general is that I can send them the money they want through their own banks, as long as the country isn't one that I'm not allowed to do business with. Okay, then, thus, as an American, I would not send money to an Iranian, even though I would be able to do so technically. I would not take that risk. The problem is that we can't use their local banking system to send it to them. For example, I can do it as long as they're in a country that lets me. I can either send them stable coins or Bitcoin over this call. I can send it to them if they show me a QR code. They could email or direct message me and say, here's how to pay me. I have money to pay them. After that, they got their full rates and could save the money. If they leave their country, they can take it with them. Because that can change what people think about Fed policy and bond rates in the future, which can change the prices of stocks or even Bitcoin. But let's talk about bonds and stocks for now. So as long as the Red Sea stays mostly closed, there is a moderate inflationary pressure that is competing with other deflationary pressures. In the event that things get worse and the US government or military gets more involved in certain areas, that could make the fiscal deficit bigger and cause more bonds to come to market than expected, which can be bad for interest rates again. In the same way that it can be bad for interest rates, it can also be bad for the stock market because they want to be hawkish. The Fed might not want to monetize debt, but this can force them to do so. So those are the main points. What if the status quo stays the same? That's kind of the basic question. The longer term question is whether this will lead to events that don't follow a straight line. Let's say we jump ahead a year or two. Now, there are questions like, does Iranian oil still get to the market or not? Okay, then, for some reason. Or is the Red Sea open or closed? There are some things that could go badly if certain things get worse. And that's the main question. Does it mess up energy? Does it cause more trouble for shipping than it already does? But I think the most important question about outliers is what happens. Does it really change the energy in a meaningful way? So I don't think anything important will happen this year that needs to go through Congress and the president. Things that would really, really matter to them because of how divided our political environment is. You know, some things can only be done by, say, the executive branch. That being said, those are usually less free to do what they want. Because of that, I usually don't count on that happening this year or any year. But it's important to keep an eye on them over a longer period of time.